Guys, I welcome you all to the third video of my 3 months mentorship. I greet you and I welcome you to this wonderful topic, which is the market structure and top-down analysis. Now we are going to treat two topics in this video. The first one is the market structure and the top-down analysis. But before I go into the discussion of this video, let me first give this special announcement, guys. I want you to help me to subscribe to this channel. I want you to help me to like this video. I want your comment on how you feel about this video, what you think I should do and what you think I should not do in this video. Like I want you to rate my work, and I want you to share this video to your friends, your family and your students and all like that, sir. So back to our business, guys. In this video we are going to treat the market structure and top-down analysis in this video. Now, what really is market structure? Because in my first video I have did a video about the market movement, in which we really talk on how the market move, and there I said precisely that the market move in two ways. Either the market should move impulsively or it should move correlatively. And I did another video on partner analysis. Now this is third video is on the market structure. And now the market structure is the study of the market movement, combining the past market movement, I mean combining the impulsive movement with the corrective movement to predict the next movement. What I mean is studying the price reaction that build up this movement. In every impulsive movement, there's a mix of corrective movement there, and there's a lot of partner there. Also in a corrective movement, there's a mix of impulsive movement there, and there's a corrective partner and there's a partner there. And study this movement and those partner together is what I categorize as the market structure. Combining all these things together to predict the next movement is what I call the market structure. And I mentioned another topic, which is top-down analysis. Top-down analysis is very simple stuff. I may still do another video on it, but I want you to get it clear, because this is how I did my analysis. Top-down analysis is simply mean starting your analysis from the top high time frame to the down time frame. I probably start my analysis on the monthly charts, weekly, daily, 4 hour, 1 hour, sometimes 15 minutes. That is top down analysis. Starting your analysis from the high time frame to the down into the lowest time frame. Why are we doing this? To see the whole picture of the market. Like in Nasdaq now, I'm in the weekly chart. I can see the chart from 2002 to the date to 2022. Almost 20 years of price action in my front. And if I in the monthly chart, I can see how the reaction from 2000 to into this present moment. So the importance of it is that you get the whole picture of how the market move, how the market behave, and you're able to predict a long time market movement. I told you about Elliott wave. Elliott wave predicts a 100 years movement of a commodity, and some Elliott wave practitioner predict 10 years, a decade movement of a commodity. So those guys start from the monthly chart. They combine all this movement together. They start from the high time frame and they used to predict the greatest movement. So likewise, Likewise, I did in my own analysis. I start from the monthly charts, get the phrase, know the direction where the monthly chart is going and everything before I go to the down movement. I go to the down time frame. I go to the weekly frame, daily frame. I get the structure and I look at my entry in 1 hour and 50 minutes. I rarely enter trade in 4 hours, but I normally enter my trade in 1 hour and 50 minutes. You can see, guys, here we can see we have, from here we have an impulsive, and here you see we have an uptrend, very long uptrend in Nasdaq, and this is tell us that Nasdaq is always in uptrend, and if you will see a retracement or a corrective movement, it will be much. I have never seen Nasdaq fall 50%, and you can see it. I have never seen it fall 50%. This is the whole information from 2000 to the present date now. So let's start our analysis. Let's start first with the market structure. So we didn't really see much information here. Let's go to the weekly chart. The weekly charts, there's a lot of information here, but I start with this here. I can see an uptrend in this place, a very long uptrend in this place. I can see this uptrend, and this uptrend really have first touch, and I can classify this as second touch because the market did not reach here. The market did not reach here, but Nasdaq, I don't expect Nasdaq to break and come here, because Nasdaq will never form a perfect ascending channel or descending channel. It may form it in a 4-hour chart, in a 1 hour chart, in a daily chart, but in a weekly chart, Nasdaq will never form it. I haven't seen it. You can see the price from 2000. Nasdaq have never formed just huge reversal pattern. So I can classify this as ascending channel, but I classify it as an uptrend. So in my first video about the market movement, I used Nasdaq as an example, and about a lot of movements here that I can emphasize here more because I've did in my first video, and a lot here. And you can see now we are in a corrective movement. By in a corrective movement, probably expecting you to break it here or to continue the movement down up. But this is what we actually have, and this is what we have, something like flag. So we may expect Nasdaq going up because of the structure, but yes, it may still come down because we can't be 100% sure all time. We cannot be 100% correct all time, but what we are struggle to be is 80% correct. That if we enter a partner, that is why if there are thousands of partner, but I just pick small, like I just trade few, like 5 of it, because I want to be 80% correct. Even if I can't be 100%, but I want to be 80% correct. So I choose a partner that follow the market direction, the market movement. You can see here we have an impulsive movement, and the next thing we can have is a corrective movement which resemble a flag movement. So but let's go to the daily chart and let's look at things here. You can see what I'm saying. This is what we have. Then we have this, and if you look at it, it's something like flag partner, so we may probably have a market going up or because of this breakout we may have a market coming down here, because we can't be 100% certainty. What we are studying is the what we are studying let me re-emphasize it again. We are studying the whole movement here to predict the possibility of next movements, to predict the probability, the probability of the next movement. So we are studying the whole price movement here to predict the probability of the next movement. And this is what I classify as the market structure. Study the whole pattern here, the whole market movement here to predict the next probability of the next movement. So now we are according to our study, we have a lot of impulsive movements here, a corrective movement, a positive movement, a corrective movement, and now have a corrective movement. We are in an impulsive movement, a corrective movement now. We are in a corrective movement now, and I call this partner a support and resistance partner, because I classify support and resistance as a partner to me. So let's go to daily charts. And the daily chart, you can see it, this impulsive movement, and this is a corrective movement. And when you see this impulsive movement, this is what we really have, something like this. That is what we really have here. Though it's not really resemble, like it's not something like flag, but let's continue our analysis. And yes, we have our support and resistance level, here. And we have 1, 2, 3 push, and we have 1, though we may classify this as 3, but yet we still have some space. We have 2, but we may classify as 3. Now let's go deeper to look at, now we have, this is what we have, now. So let's go deeper to look at what may probably happen in the low time frame, like 4 hours. So here in the 4 hours, in our past history, we have a W touch, W formation, and all these things. And now precisely we have our first touch here, and the market come back like this again. Maybe the market is going up, continuous movement, consolidate here, break down. Maybe the market is coming, consolidate here, and go down, break the trend, or maybe it will come like this and move like this. But let's just wait and look at things. This is really what we saw. We didn't see much information here. Let's go to 1 hour. But in 1 hour, that little movement here, so what really do we have? So this is what really we have, and on the hourly charts. So this is on, I call it unclassified trade, because all I have to do now, if I want to enter this trade, is to wait, because market is going to give us a reaction here. Why? I call some area the market zone. I call this a market zone. A market zone to me is where two important level meets. We are going to have reaction here, either break it up or reversal. We are going to have a reaction here because two important level meets here. Let's go to the daily chart. We see I call this line the support trend line. It is also a support horizontal line. So and they meet in the same place. So this place is going to be a golden zone. We are going to find a reaction, a most reaction, either to break out or to continue it or to reverse back. But we are going to have a reaction here, so we should patient and see what the market will provide with us. We are not trying to fool the market. We are not trying to move ahead of the market. All we are trying to do is to follow the market full step to predict the probability of the market next movement. So what I saw again in this list is you can see this movement here. There's one candle here, indecision candle, and after that candle we have an bullish candle. After that we have a movement up. The same thing we are having it here. So probability winning, if we can have any bullish candle here, we may expect an movement and a reversal movement to the upside. And if we can probability have that movement to the upside, yes, we are expecting a breakout of this zone to the upside. Then we are expecting a continuation to the upside. So that is really what I discovered in Nasdaq. I don't want to waste much of our time. So if I want to enter this trade now, I wait for market to give me an information here. Though I'm seeing something like impulsive movement of the information, something like this, seeing something like this. But we are in an important zone now, so we should wait for the market to give us an information. Maybe the market is going up or is going to break this channel. So we should wait because we have to follow the market full step. We are not going to move ahead the market, and the market is going to provide us an information. But probably if it break it, we expect a trade profit here because Nasdaq is not fond of going to down movement like other currency pair and other crypto like that. And if it eventually come back here, we are expecting a movement to this side, and probably that may take 2 to 3 months before we reach our target here. So guys, let's go to another pair. And let's look at something. Let's go to Eurocard. Yes, let's go to Eurocard. Here we are in the Eurocard, the monthly chart from October 2001. The only thing I can see here is a large corrective movement. Large corrective movement. In which we are 1 2 1 2, and we have support and resistance level. I call it large corrective movement. Price moving from here, and price starts consolidating, giving us a partner like this, something like flag partner. We may probably expecting a breakout to this downside or maybe this side, but we actually expecting a breakout to the upside because of this partner, but this is a corrective phase, not a reversal stuff. But let us start combining all the information together. Let's start combining all the information together. Yeah, from the monthly chart, we start analysis from the monthly charts. Start analysis from the monthly charts. Now let's go to the weekly. So in the weekly, we have a lot of information here too. There's a lot of information here that we guys should look careful into. Our first touch and second meaningful touch. Now what we have, so inside the corrective box of the monthly charts, I'm seeing something else again. I'm seeing a descending channel. Here, the monthly chart, and the descending channel. You have 1 2 expecting. No, I'm coming. Let me use my candlestick. One, two, three, 1 2. So within the market didn't touch. We really have space here, but we can't ignore it because we are not going to get a perfect signal always. But inside this descending channel, I discover a movement like this: impulsive movements, corrective movements, impulsive movement, and another corrective movement here. Let's start look at it. So I combine it together to predict the next possible movement of this pair. Yes, I'm probably expecting a few retracements here. Let's go to daily chart. Let me draw this. So you can see it, guys. As price is coming from here, we have a corrective movement here, and price eventually break it. And again, we have a corrective movement here. We are probably expecting a breakout to this downside before the market come here. Probably break this because of this ascending channel to reach here. Yes, let's go to weekly. Yes, what we are really expecting. We are really expecting the breakout of this movement, and we are 80% sure that we are going to break out like this before we have a movement like this. Though we are not 100% sure, the market can still move against us, but we are going to follow a strategy back to back, because there's no perfect strategy. There's not 100% certain strategy. Sometimes the market do move against us, but all we know that we are going to write 80%. That is what we are fighting for. Not to write always, but to write 80%. You see, we have a flag, our corrective, and we are expecting a movement here now. Because of this partner, we are expecting a movement here, because this is what we really have. A small corrective movement here, a breakout, price come here, move here again, and we have this. This is one of a powerful flag that I've noticed in my trading experience. I call it flag within flag, because I first have a small flag, then I have a larger flag of it. I'm 80% sure that the price is going to break this because of this pattern here. So let's go to 4 hours and let's look at price movement. This is what I'm saying. We have a tiny corrective movement here, then we have a breakout, then we have a larger corrective movement here. These are those patterns that I really trade and I trust in them, because when I take them 100%, 100 times, you can try this in your demo account, take them 100 times, I bet you that you are going to win 80 times if you really take, if you didn't make any mistake in analyzing the market movement. So inside this corrective box, we are going to look at it deeply to predict the next movement. And what we can see here is, first we see our first touch here, we see second touch. Probably we may have this, or we may have this like this, and break out of this shadow. But I'm not so sure of that movement. But because in my line chart was showing another thing else, so I can say this is really a channel. I can say this is really a flag, because it do resemble a flag. All I can just say is that I'm sorry. We have a flag, we have a little flag here, then we have a breakout, we have little one here, we have a breakout. We probably have things like this and break it out, or probably coming up like this, but we should wait for the market to give us its reaction. All we just have to do is combine, look at how the market move from the monthly charts. Study the impulsive wave that we have, the partner inside the impulsive wave. Study the corrective movement, the partner inside the corrective movement. Use those partners to predict the next movement. The construction of the structure is to build reasons, know why the market is going to break out and why it's going to break out. You can see here we have build reasons. One, we have at the descending channel, then we have all these corrective movements. We build them up. We know things that form this movement, how price react in this movement. That's really market structure. And we do this by analyzing from the monthly charts, the weekly, which is top down analysis. So we are probably expecting a movement down here before we go up. Before we go up back. Before we go up back. So guys, let's go to 1 hour. So the same thing here. We just have to wait to see the market, how the market is going to react. So let's go to another example, guys. Let's go to Euro card, Euro US card, Euro US card. Let's start from the monthly charts. Here, this is what we can see. We have impulsive movements and we have a corrective movement first. That is what I first did in the monthly charts. I told you I have impulsive movement here, not the phase that I am. I know if you can see this thing, you have thing like this, and to me, like as I'm seeing this thing is building up a channel, really building up a channel, and we all know that I forget to tell you something about partner analysis. Those 3 partners that I give you, 2 of them are reversal partner and 1 of them are continuation partner. The reversal partner is the channel. Anywhere you see channel with its tail touch, you should know that it is going to reverse. And the W formation and the M formation or the triple formation, they are all reversal partner. But the flag partner is a continuation partner. So bear that in mind and accept my apology for not saying that in the second video, in the main video of partner analysis. It escaped my mind. So now this is what we see in the monthly chart. We are still expecting a breakout to this movement, but we probably have here the third touch, 1 2 3, 1 2 3 before breaking down to this level. So we are going to look into this area. The partner, how this area will form and everything to predict the next probably movement. So that is why we are going to go to the weekly chart. And the weekly chart we see impulsive movement, corrective movement. Probably we are expecting a movement to the downside here. Yes, that is really what we are expecting. You can see the impulsive movements here. We have, and there's something again I want to tell you. Let's look at this. In the monthly, it's like a tiny flag to us. And in the daily, in the weekly, we are having something like ascending channel. Yes, we are having something like ascending channel. But it's not really the perfect one, but yes, it's still ascending channel. We can't always have the perfect structure of the market. We can't always have the perfect. So we are probably expecting the breakout of this movement because of this. And here too it's even like a flag. It's like a flag here. When you look at it, you can see it is like a flag here. And flag is continuation. We're probably expecting a movement here, breaking it out, or probably a movement here, form a W formation in the monthly, and go up to this level before come back to that level before breaking out. So let's check it in 1 hour in daily. And do you see this movement here? The movement here, the movement is really a flag partner in the weekly chart and in the monthly chart, but in the daily chart we are having a channel, price going up, price going up, to look at things here. Yes, price going up, you can see it forming a channel, 1 2 3. Though this one is really a corrective movement, but in many times the market really count this as the first touch of this support level, of this resistance level. 50% times the market are fooled me like that, counting this thing. That is why anytime I discover it in it, I start count it. If markets go back like this, there's no problem. I am expecting my downtrend. I always follow the market. I didn't move ahead of the market. I always follow it. So this is the structure we have now. We have a partner of ascending channel, and let's go to 4 hours so we can look at this movement clearly. I see a movement here that I want to cut your notice. Do you see that in my first video I did a video about this pair particularly? Do you see an ascending channel here? Do you see an ascending channel here? And we have the breakout of the ascending channel now. What we really see here is we see impulsive movement to the upside. But as we see impulsive movements, when the impulsive movement got to this area, we discover that the impulsive movement start forming a corrective nature, start forming a flag pattern here. So we form a flag pattern to the resistance level here, and this gives us a reason that the market is going to break it out. It's going to reverse. It's not going to break it up there. It's going to reverse. So we are not going to expect a breakout of this place because of this structure, number one, and because of this reaction in the daily chart. We are not going to expect a breakout here. We can only expect a reaction in this area and coming down to this area. That is only thing we can expect. When you start looking at your charts clearly, you start take notice of this thing, you see them that they work 80% times, and after this thing you see the breakout. This is to tell you that really this partner really works. It really works. This partner really works, and you have confirmed its movement here. But again, we have another thing. Do you see we have a flag? We have a flag. That is the movement. We have a flag here which tells us that price is still continuing its movement here after the breakout of the flag. Let's go to 4 hours. All we see here is there's an impulsive movement here. You start notice why I said I love flag the more. See, after the breaking out of this channel, it gives us something like this flag, and we have it like this. and it breaks down to this side, and now it's giving us another large version of this one. So this is telling us that we are still having a continuation to this level. If this one can confirm, that gives us 80%, 50% reason that this one will also confirm coming to this level. So now we are going to have a line here, regard it as a flag, and there's also a flag here. I call it somehow tiny flag, a tiny flag in 4 hours and daily, but it will be large flag in 1 hour and 50 minutes. So we are going to look at this clearly now. What probably can we expect here? So we can, as I'm looking at this chart, we can expect a movement back here, then back here. Then we have 1, 2, 3, 1, 2, 3. The reason of me saying it is that the market has given us indecision candles here. We have a candle here, and the candle is a reversal candle. So all we need is a confirmation candle that will confirm it, and we enter in the middle, take profit here, and after that we expect another reversal partner to this side. But let's first look. We have an impulsive movement down here and a corrective movement. Let's look at this zone, and let's look at what usually build this zone for us. Yes, I'm seeing something, guys. You should start believing in this partner I call ascending channel. Now you see, I told you something in the monthly chart, maybe in the weekly chart, about forming things like this, that market starts fooling me like this. I weaken this, some market will fool me, break out, but you can see the market can this 1, 2, 2, 3, and market break it out. You see, the market eventually break it out, and it confirm its move. I call it 80% because 80% times when channel break out, it's back to where it fall. If you look at my analysis in the channel, you will see that my best partner is this flag and channel. That is my best partner that I'm trading. And if you look at this place too, you are going to see something again. You are going to see a flag. You are going to see a flag too. This is also a flag. And after the flag, you have breakout. You have a breakout to this downside. And let me now show you something. You have a steady channel here. It confirms it breakout, give us a flag, and it confirms its movement here. And also in 1 hour, we have a flag here. We have a steady channel here. It confirms, it gives us a flag, and it confirms its movement here. That means so now we are expecting this flag here to confirm its movement here. And after it confirms its movement here, what are we expecting in the daily chart? If this partner can fulfill their own, we are even expect this partner to fulfill his own. So we are probably expecting a next impulsive movement to this side. We are expecting a next impulsive movement to this side because we are seeing this reaction confirming this partner in the same pair, the same Euro US card. We are seeing this partner confirming the low time frame. First, in the daily chart, you see how it confirm. In the 1 hour, you see 1 hour stroke, yes, 4 hours and each stroke 1 hour, you see how it confirm. We are also expecting that in the daily chart to confirm its own movement. So what are you probably expecting? Guys, I'm probably expecting a breakout, a consolation, give us flag and dare to this place. That's what I'm really expecting, guys. So this is what I'm expecting, guys, and I'm 80% probability expecting that movement, guys. I'm 80% expecting that movement. The combination of the market movement and the partner give me this structure. Give me this structure, and this structure give me the probability of the next move. When you combine the market movement with the partner, we deliberately have a probability of the next movement. And what are we really expecting here now? So we are expecting a corrective movement, an impulsive movement, a corrective movement to this side. Then in the monthly, we may probably have a W formation. I say probably because I'm not so sure. The market is going to give us an information about that when we reach there, or we may have a breakout, consolation, maybe large flag, and price reach this area. But if price come here like this, give us like this, we still expect price come like this, give us this thing, because of this partner, this ascending partner, combining with this structure of the markets. So this is what we are expecting. So guys, I encourage you to, after watching this video, open your demo account, start practicing, start notice ascending channel, descending channel, flag, W formation, M formation, and all these things. When you start noticing, take note of these things, looking at this, searching for this thing in your chart, you are going to see them. And I have a lot of analysis that can even help you in this channel. I did analysis about gold, US card, even in my previous video. You can watch it, and how I did analysis on this stuff. All these things are going to help you in doing your analysis. You can use them, you can watch them over and do your analysis. So the movement, we are still expecting another movement here, but all I just know that it may be long, but price is still coming here because of this structure. Price is still coming here because of this structure. We are going to have a breakout to this structure, to this place, because of this price structure. So guys, I beg you, go and practice all this. Practice all this. You are seeing now when we are saying top down analysis. What is really top down analysis? I think it's not really worth of what I'm doing another video on. Top down analysis is really mean starting your analysis from the monthly chart, from the high time frame. Like I start my own the monthly time. I can see this. Say this is something like head and it is something like channel. Expecting this movement, I can capitalize on this movement. All else I need to confirm this movement now is to go to the weekly time frame to start studying this reaction, to start studying this movement, start studying the pattern that are formed in the past to predict the next movement. So I will know maybe the price will come here directly or reverse to this place before coming here, but I'm 80% sure that price is not going to break this area up. I'm 80% sure because of this flag. I'm 80% sure that price is not going to break it down. So top down analysis is starting your analysis from the high time frame. You move on to the weekly, into the next, like the weekly, and you see things like here now. I'm seeing the flag which tell me that price is going to break this, and sometimes price is going to break it much, because there's a rule I even have that sometimes price is going to fulfill 50% of this place in this place, and sometimes 80, sometimes 100. But the only thing that I'm not sure, I'm not so certain of it, but I'm certain that sometimes price is going to fulfill the half of the first in the previous impulsive movements. So now I'm knowing that what I'm expecting in the monthly chart is probability, maybe W formation or breakout because of this movement in the weekly chart. So I will go to the daily chart. The daily chart to now give me that this movement is going to confirm because of this channel and all things like that. And in the 4 hours you can see it. This tell me that the BE, because of this partner, I'm sure that the price is coming here, but I must first have a retracement, a price going up like this before coming here. So guys, that is the importance of market structure. Market structure is combining of the first of is analyzing the market previous movement, analyzing the market previous movement to predict the next movement by looking at the chart that are formed in the movement, by looking at how price reacts in the movement to predict the next movement, guys. So that is what I can really see for now about market structure. If there's another need arise to did another video on it, because it's what you must know, because you must understand it. If you don't understand how to combine, how to construct the market structure, then you don't know anything about price action. You will have problem in analyzing. We have problem. That is the main reason you are having problem in analyzing. And first thing you should bear in mind is the market movement. What creates those reactions is the market movement. Or what creates this reaction here now, this what we are seeing here, all the things that we are seeing here, all this is the market reaction here. Is what creates it, is what creates all we can see inside here. So the first thing you should notice is the market reaction. In the market movement, after that, look at the market reaction inside the market movement to predict the next market movement. That is just the market structure. Start combining partner with partner to predict the next market movement. So guys, I beg you to start practice your demo account, and please help me to share this video. Thank you. See you in my another video, which is the importance of watch list, the importance of creating watch list, why you should have your own watch list. So see you in the next video very soon. I thought by next week Tuesday I will post that video. Thank you.